Hey guys, welcome back to Stock Tricks with Nick. I hope you're staying home, staying healthy, and staying sane during this quarantine. The market this week was extremely choppy, which makes it difficult to trade. When the market's up, people in short positions sell for a loss and might take a long position, and then the next day when it comes back down, they're losing money that way. Congratulations if you made money this week. Hit the like button if that was you. If this week was a losing one for you, comment below what trade you took that dug into your profits, and what you would change going forward. Everyone has losing weeks. I lost for 5 straight weeks from the end of January to March 1st, but by writing down each of my mistakes and learning from them, I've been able to string together 5 weeks with an average profit of $1,200. This week, my portfolio was mostly on the short side, but I did pick up a share of Amazon just in case the market rallied. Monday and Tuesday, I was down about $50, but I was able to offset some of those losses in the short positions by a winning put spread on Slack. Earlier in the week, I was just building up the short positions in Lyft, Tesla, Starbucks, and Nike. These positions paid off. When the market closed on Friday, my account was up $2,660, or 19.7%. The last 5 weeks, my accounts jumped 57%, from $10,300 to $16,150. We learned the most from our mistakes, and that week I lost $2,000 was just the punch in the face I needed to get serious. Since then, I've treated the risk management side of trading as a business instead of a hobby, and the results speak for themselves. Speaking of hobbies, my new guilty pleasure is watching day trader Dave Portnoy live stream his trades. On Tuesday, he started estimating what his annual return would be based on his winnings.
There's 52 weeks in a year times 5 days. That's 260 trading days times 88,203. If I can do that, I make $22 million a year. Keep it up.
This got the attention of penny stock trader Timothy Sykes, who estimated that Portnoy would lose everything because of a lack of training, and that kicked off the Twitter battle. Unfortunately for Sykes, he was dealing with a real entertainer and got put in his place. By the end of it, Sykes bent the knee to his new king Portnoy. And the next day, Portnoy lost $450,000.
It's a bloodbath. I'm down $400,000 today. DDTG. Now, do I look like I'm panicking? $450,000. Shut it.
I don't think you should be looking to Portnoy for advice on how to trade, how to manage risk, or trade without emotions. But it's incredibly entertaining, and I'll be tuning in each day for more. So follow him on Twitter at @StoolPresidente. And while you're there, make sure you follow me for market updates, personal finance tips, and Chicago Cubs content. In other market news, unemployment numbers came out on Thursday worse than expected. An additional 6.6 million Americans filed for unemployment benefits, bringing the last 2 weeks' numbers to 10 million. And how did the markets respond to this? They opened up flat because it was already priced in. Then, later that day, we had a strong market rally from none other than Trump's Twitter account. He tweeted that he talked to his friends Putin and the Crown Prince and suggested that they were going to start cutting back on oil production. Remember, besides coronavirus, markets have been depressed because of the oil feud between OPEC and Russia, especially in the banking sector. After Trump saw this rally the market, he doubled down on his claims, suggesting that they could cut up to 15 million barrels. And he suggested that the higher oil prices now are going to be good for Americans, even though last week he tweeted that the low prices were good. Either way, Trump's claims were refuted by both parties, setting the market up to slide into the weekend on Friday. Speaking of untrue claims, how many of you got caught in Luckin Coffee's crash on Thursday? Luckin is a Chinese coffee company that went public in May of 2019 and has been very popular in the trading world. That is, until the COO fabricated their sales numbers and the stock dropped 75% on Thursday and an additional 15% on Friday. This was really unluckin for me because I had puts on SBUX, which was their main competitor in China. On Thursday, SBUX shares popped up 8%. But by Friday's close, they were back to their lows and my puts were profitable. After the close on Friday, Warren Buffett's company, Berkshire Hathaway, disclosed that they sold 13 million shares of Delta Airlines and 2.3 million of Southwest. After the news was reported, all airline stocks landed at new lows because the market always reacts to what Buffett does. This could indicate that the virus's impact hasn't been fully realized in the sector's price. Let's hop to the E-Trade platform to take a look at the technical analysis that brought me to the 3 trades that I'm holding over the weekend in Nike, Starbucks, and SPY. It's hard to be rooting against day trader Davey, but that's exactly what I'm doing as I took 2 put spreads on Nike on Tuesday. I took some bruises as he willed the stock to 80.40 on Thursday, but bought my hedge back at the end of the day. By this, I mean I bought the 2 75 strike puts that I had sold in this put spread. On Friday, the stock started moving in my direction, and we're now sitting around 83% profit here. I sold off one of my open puts during the day on Friday to lock in gains and reduce upside risk, but we'll be holding the other one over the weekend. The stock's been magnetized to the 8-day exponential moving average the last 3 days, but it's just going to take one large move down to cover this gap from last week, at 72.66. If it does, I'll take profits and close the trade out. Otherwise, there is a gap that I have to be aware of just above the current price. So if the stock moves higher on Monday over the high of Friday's price, I'll exit for a reduced profit. Last week, I talked about a Starbucks short position that I took with an expiration of April 3rd. On Tuesday, I rolled that trade into a similar put spread, but this time with strikes of $65 and $55 that expired on April 17th to give me more time for the chart to play out. The idea here is still the same though. The stock has been downtrending following the decreasing 20-day simple moving average. Then on Wednesday, it dropped below the 8-day exponential moving average. Like I mentioned earlier, Thursday we saw this pop up, but I hung in tight since my position size wasn't too large and the rest of the market was moving lower. On Friday, I got the confirmation I was looking for with another close under the 8-day exponential moving average and a new set of lower highs and lower lows. The goal with this trade would be to take profits when the stock moves lower to cover the gap from last week. This would be at 57.44. If that doesn't happen quickly enough though, I'll exit on the first day of higher highs and higher lows on the daily candle. I started off with the put spread on SPY with strikes of 262 and 245, but then I bought back my hedge, the 245 strike put, on Thursday as the stock moved up but couldn't close over the exponential moving average here. This allowed me to make more profit on Friday's drop. I decided to hold it over the weekend because, like Starbucks, there's a gap below that should fill if we get a strong move down. This gap closes at 230, so I'll take profits there. Otherwise, I'll take this trade off for less profit if the stock closes above the resistance of the 8-day exponential moving average and the 20-day simple moving average. Thanks for tuning in to Stock Tricks with Nick. If you enjoyed this video, please like and subscribe to the channel, where I make weekly trading recaps here and personal finance videos to save you or make you money. As always, I link my trading journal in the description below, along with my Twitter and StockTwits accounts. Leave your prediction of what direction you think the markets are going to go in the comment section below, along with your reasoning. See you guys next week.